cost in per unit, it doesn't show a constant number. It shows per unit cost decrease with the increase in level of activity. So vice versa, if activity decrease, the fixed cost, per unit fixed cost start rising. If activity or quantity increase, the fixed cost per unit start decreasing, right? So this is a quick check. So I require everyone to participate here. So which of the following cost would be variable with respect to the number of cones sold at Baskin and Robbins shop? There may be more than one correct answers. So tell me, which would be the variable cost? Number one, the cost of lighting the store. It's variable or fixed?
Variable.
It's variable.
Fixed.
Yes.
Oh.
I think it's fixed.
Yeah, I think it is fixed too.
Think about that.
I think variable.
We didn't focus on, I think, on the question. Again, let me read that. Which of the following costs would be variable cost with respect to number of cones sold? Now our analysis is changed. With respect to number of cones sold.
It's C and D.
If you sell the cones more, do you have to pay the more lightning cost? Or if you sell the less, you have to pay more? So A is not a variable cost. B, the wages of the store manager. Store manager, not the store worker. Store manager.
No.
Store manager's salary is variable or fixed?
It's
I think
fixed.
fixed.
Fixed, right?
Yes.
Not the variable cost.
Mm.
C, the cost of the ice cream.
Variable. Variable.
Why is that?
Variable. Yeah.
Variable cost.
You
It's
sell
changing.
more, the cost going to be more. The raw material cost going to be more, right? Sugar
Yeah.
cost going to be more, right? This kind of stuff. It's a variable cost. Well done. And the cost of napkins for customers,
Also variable.
right?
Yeah. Variable
Sell
cost.
100 cones, you will have to provide 100 napkins. If you sell 1,000, you need to provide 1,000 napkins, right? That's a variable. The answer is going to be C and D. Very nice. Now, mixed cost. We also call it semi-variable cost. So mixed cost is a mixture for both variable and fixed. So sometimes a cost is offered in a fashion that it looks like a semi-variable. For example, electricity bill. If you don't use any kind of electricity the whole month, you still have to pay, for example, $50. And after that, if you use more units, you have to pay more, right? So when the bill, electricity bill comes to you, so that is basically not a variable, purely variable bill. That is a mixed bill, which include fixed and the variable as well. So here we go, how we can segregate this bill into fixed and variable one. Use a straight line equation method, that's it. Y is equal to A plus BX. You have the bill, you can segregate easily. So let's not go into these mathematical details. Let's just do the example to find out that. So if your fixed monthly utility charge is $40, your variable cost is 0.03 per kilowatt hour, and your monthly activity level is 2,000 kilowatt hours. What is the amount of your utility bill? Simple. Your variable cost of using the per unit of the electricity is 0.03, and you use 2,000, right? So 2,000 multiplied by 0.03. Answer is 60, right? Plus the fixed rent. If you use, if you don't use, you still have to pay $40. So 100 is your electricity bill, which include 40 as a fixed cost, 60 as variable cost. So this 100 of electricity bill, we cannot say that it is purely fixed or purely variable. It is a semi-variable bill or mixed cost bill. Everybody understand that?
Sir.
Yes. So the analysis of mixed costs. So accountants analysis and engineering approach. So if you're an accountant, you say that why we need this mixed cost analysis where the engineers, they say different story. So in accountant analysis, each account is classified as either variable or fixed. That's it. Right? They don't bother to segregate. Even you see that one, even the bill in the billing one is $100. They can say that the fixed amount is very limited. Whether you use or whether you don't use that, that is sunk cost. Whether you use it, whether you don't use that one. So it's already committed. Whenever you have a connection, you have to pay $40. So that doesn't matter. Matter is the thing, the usage. You use, you pay. That's it. So they don't bother to consider the cost into mixed and, you know, the mixed cost. They always calculate either fixed or variable. That's why in economics and in accounting, in finance, we always talk about variable and fixed costs, because that is not the concern about the mixed costs with respect to the managerial decision making. That's it, right? But engineering approach is different because they classify the cost based on industrial engineering evaluation of production methods, materials, labels, and overhead requirements, right? Because they need to build the projects, mega structures, and all the stuff. For that one, the cost of the machinery, rent is also very, heavy. It's not about like, negligible. It's heavy. For example, you need to construct 100-story 100-story building. You need to rent cranes and all those stuff. You need to pump, special kind of like diesels and lubrication, a lot of stuff. So diesels, petrol, high octane, and these kind of stuff, they are variable. But the rent of that cranes and all the stuff, it's also a fix. You have to pay a fixed rent. But that is not a minimal part. That is a huge chunk. Sometimes the variable cost is very small, the fixed cost is very high. So they do focus on mixed cost as well. So they want to segregate whether this is fixed, this part is fixed, or whether this part is variable. But in accounting analysis, normally when they are having some kind of normal day-to-day or business routine decisions, they classify simple, variable cost or fixed cost. Everybody understand that? By the way, why we are discussing engineering approach here? We are not engineers, right? Why we are discussing engineering approach here? Because managerial accounting, the other name is also called cost accounting. It's not about that you are, having a cost analysis inside the factory. You can be evaluating the cost of the project as well, the construction project as well. Or, for example, on a software testing facility as well. To test a software, you need a special kind of machine. You are also renting that machine. The more you use the machine, you have to pay electricity bill, but the rent is huge. Right? So accountants are needed even in engineering field as well. Right? Okay, so again, our last class participation. Yes. So I'm going to be again setting the breakout room, and this time you need to pay more attention to the measure of activity, the focus on which you decide whether this is variable or fixed. Remember, the nature of the cost behavior depends on the view or on the activity that is on focused. That In previous example, we talk about that. You know, this one, this example, based on number of cones sold, right? Then our analysis is totally changed, right? So this is the same one. Here we go. Why I cannot see that one? Amazing. There we go. So I want you to take a picture before I set up the breakout room. This is a group activity, same like our previous class participation. And you are required to do that. I'm going to give you 15 minutes to do this. Everybody must participate and understand that why one member is saying fixed and why the other member is saying variable cost, okay? And then we talk about its solution. Everybody take the pictures. Here we go. Please join our breakout room. Okay, guys. Any one of you, please share a screen of the question that it is very easy for you to discuss.
Okay, so we don't need to send it to you?
You need to send it to me, but I'm just asking you, share the screen of the